Hey folks, welcome back to the channel. This is Jason, and let's talk a little bit about oil. Now, you guys know that oil is one of my favorite subjects to talk about. I think some of you guys don't understand why it's my favorite subject to talk about. It all has to do with energy production. The price of oil, in many ways, is telling us where the economy is going, or it's telling us where the economy has been. Energy production is absolutely integral to everything that we do, and it's one of the things that has made us an energy powerhouse for the last 100 years or so. It's also the thing that has driven most conflicts over the last 100 years or so, and it's very important to the world economy as a whole and to geopolitics as a whole. So let's talk about what's going on right now. Oil prices are up just a little bit today. And this is despite the fact that OPEC announced a 137,000 barrel per day increase every month for something like the next 18 months. And that is going to be a 2.5 million barrel per day oil production increase over that time period. So, which means that with oil at 62.44 a barrel today, we're sitting pretty close to a 5-year low. I expect us to dip somewhere at least into the mid-50s sometime pretty soon. Largely on supply concerns, the Northern Hemisphere is oversupplied. We're looking at a glut of oil. We're looking at running out of places to store it in Europe and maybe here in the United States sometime soon. Although we are likely to see a pretty substantial decline in production here in the United States, because it's not going to be economically viable to do so anymore with prices under $55 a barrel or so. And it may get to that point. This does not mean that you are going to automatically see reductions at the gas pump, even though that is the aim of the administration, fulfilling a campaign promise. And yes, Donald Trump did have something to do with this. He did put pressure on the Saudis to lead OPEC into making this oil production increase. There are good things about this and there are bad things about this. I am on the side right now that this is actually a good thing for the global economy as a whole. This is probably not the best thing for American jobs, and let's talk about how this happened, okay? So OPEC Plus, which is OPEC and a bunch of aligned countries, they've agreed to further oil output boost from October to regain market share, and this is really one of the great reasons that Saudi Arabia led this effort is because they lost a ton of market share during COVID based on a couple of agreements that were made in that time period, and they've struggled to regain that. They're willing to accept softer prices now in order to regain that market share. So all of these countries have agreed to further raise oil production from October as the leader of OPEC, Saudi Arabia, pushes to regain market share while slowing the pace of increases compared with previous months due to an anticipated weakening of global demand. So why would the government of Saudi Arabia expect decrease in global demand? It's because they expect a global downturn in the economy. So OPEC has been increasing production since April after years of cuts to support the oil market, but the Sunday decision to further boost output came as a surprise amid a likely looming oil glut in the Northern Hemisphere winter months. So the 8 members of OPEC decided on an online meeting to raise production from October by 137,000 barrels per day. This is much lower than the monthly increases of 555,000 barrels per day for September and August and 411,000 barrels per day for July and June. At this point right now, this is more of a signal than anything else. And one of the interesting things about this meeting is that this meeting, which is going to raise oil output by about 2.5 million barrels per day over the next year or so. This meeting took 13 minutes. The Sunday deal that also means that OPEC has begun to unwind a second tranche of cuts of about 1.65 million barrels per day by 8 members more than a year ahead of schedule. So a bunch of members agreed to cuts a couple of years ago. They're unwinding this right now, and they're saying right now that the barrels may be small, but the message is big. The increase is less about volumes and more about signaling. OPEC is prioritizing market share, even if it risks softer prices. So who are they taking market share from? It's mostly about taking it from Russia. This is going to benefit Ukraine in their war against Russia, since oil is the primary way that Russia is raising money to fight the war. You can basically think of Russia as a giant gas station with a military. That is essentially what they are. They're not a real country anymore. It's just a giant gas station with a military, and not a great military at that. Ukraine, with basically no air force and no navy, has destroyed the Black Sea fleet, at least 30% of it. They've also destroyed somewhere between 20 and 25% of Russia's oil production capacity at this point and have taken it offline. Sanctions have also made it difficult for Russian oil to access the market. And this wasn't enough for the Saudis and OPEC. They decided to increase market share more, bring prices down. They're probably shooting for the upper 50s, lower 50s, like $51 to $55 a barrel. That works out well with their budget productions if the volume is sold. But it actually really hurts Russian production, really hurts Russian finances. Their plans for oil were something like $75 a barrel and north in order to support their budget. They're not going to be able to do that at all. So there's new capacity from Saudi Arabia, new capacity from the United Arab Emirates, and they're actually punishing Kazakhstan right now to a degree for overproduction. So the increases in output have led to a fall in oil prices of about 15% this year. Oil is up a little bit right now because it's not as bad as it could have been. They haven't collapsed right now. They're trading right now at $62 a barrel, supported by Western sanctions on Russia and Iran. And this is one of the reasons why OPEC is continuing to increase output. Also, with the United States threatening another oil producer, Venezuela, I think that they're pretty confident the prices are going to stay at least in the 50s and they're not going to totally collapse. So let's talk a little bit about who this move is going to benefit. Like I said, number one, it's going to be the Saudis. They're going to recover market share. Number two, it's going to be the Ukrainians. Their enemy is going to have a lot less money to spend, especially with their oil refining and production capacity being taken out. The American consumer, be careful when it comes to gasoline. Your gasoline market is local. It is not global like oil is. Your gasoline prices depend on the cost to transport that gasoline to you and how much capacity to refine is in your area. For example, where I live in California, there's only 2 refineries. Gas is not going to go below, $3.50 a gallon, maybe in my lifetime ever, unless we produce another refinery. And one of the refineries here in California might be shutting down due to economic reasons unless the government decides to buy it. I'm talking about the state government decides to buy it and operate it. And there are no plans to build another refinery here. And we should be building another refinery despite environmental concerns to lower energy costs. Are you going to see cheaper prices at the pump? Yes. How much is it going to be? I don't know. It may not be that much. Depends on how much. And remember, it's not simply about oil. If your oil input costs are lower, it doesn't necessarily mean that your gasoline prices are going to be cheaper. There are all kinds of market factors that play into that. If you happen to live on the Gulf Coast, like in Texas or Louisiana, you probably will see a significant decline in prices. Other areas, possibly not. So who does this really hurt? In the United States, it's going to hurt people who are employed in oil drilling. The conservative estimates that I'm seeing right now are that the United States is going to lose 150,000 high-paying jobs with great benefits. That is unfortunate. To me, it's not worth it to pay 50 cents less at the pump. So, and somebody has to lose their job because of that. But this is the real world economy. There are always trade-offs like that. You can't preserve everyone's job. You can't get everything cheaply that you want to get cheaply. Anyway, there's a lot to talk about. Tell me what you think about this in the comments below. Thank you very much and have a nice day. I'll see you later on this week. I have another video planned.